going live.
Hello, everybody, and welcome to episode 81 of Bank to the Future Live. We've had a bit of a break over the Christmas period, and we're now back for our first episode of Bank to the Future Live for the new year of 2021. Hope you all had a great holiday period. I know it was very rough for some people and other people. I guess we had the Bitcoin prices going absolutely crazy, so at least there was some people that had some good news, depending on what your situation was like. It seems like the whole world has completely changed, even since we did the 2020 year in review and 2021 forecast. But hopefully you managed to position yourself up financially if you've been watching Bank to the Future Live or you've been watching any of our other broadcasts. And hopefully the financial side wasn't as anxious as it is for many people in these challenging times. But what I wanted to do today is we've had a lot more people join the community. We want to take as many questions as we can. As always, we've got Famida here moderating. So let us know in the live chat where you're coming in from and let me know that you can hear everything okay. I'm going to do a bit of screen sharing today, and we're going to go through some points on the secondary market. The reason for that is because strategically at Bank to the Future in 2021, we're going to be doing a bit more of a focus on the secondary market. We started to notice a spike in volume. So investors, if you had some sell orders on there, we've known that a lot of you have been filled in those orders. And so we're starting to see volume increase on there. And I wanted to make sure everyone comes from a good understanding of what the secondary market actually is. And so we're going to cover a little bit more of that, and we'll give some live demos in case you're new to the Bank to the Future secondary market. Then we can take as many questions as we can in an Ask Me AMA session. And Famida will be moderating and picking out those questions. So feel free to get started now with those questions. So as we said, when we did the last 2020 year in review and 2021 forecast, we expected additional growth in the Bitcoin sector. And we certainly went into one of our raging bubble markets, Bitcoin, that we're used to if you've been involved for the years. If you're new to the market, welcome to your first Bitcoin bubble. It tends to happen like this short term, because short term, the markets, just like every single financial market, can be manipulated by those that own a lot of that stock, or that Bitcoin, or that whatever it is. So short-term traders normally get wrecked. 90% of people lose money to the 10% of insiders, and it's no different with Bitcoin. But if you're investing for the long-term fundamentals, then investors play on an even playing field, not evil, an even playing field. So you can not worry about some of these, and you look forward to the bear markets as accumulation phases and bull markets for realizing some of those gains. And if you don't trade too much, you don't end up with these huge taxable events that have caused so many issues for people not frequently trading and ending up with no Bitcoin. Hopefully you're not in that. We've been doing a lot of investor education recently because we want people to really understand the optimum strategies from the 100,000 investors that we've learned from over the years, being active investors in this space from the very beginning, and seeing the difference between those who made tremendous wealth and those that didn't quite get ahead of the trend. And it's never too late. And that's why we're pushing out this educational series, because we're still right at the beginning of that. So if you haven't watched the 4-part video series on retirementplanb.com, then please do go ahead and understand some of the investment trends. And one of the things that we're really focused on right now is helping people understand where private equity and Bitcoin and crypto companies fits in to the portfolio and how people should think about it. Many of the things that we've been trying to help people understand at Bank to the Future for the last decade, as we are now the world's first, we are the world's first crypto securities business and the longest standing company in Bitcoin at Bank to the Future. And so the secondary market is something that we launched a couple of years back And I think people expected it to be like a cryptocurrency exchange where you frequently buy and sell and have liquidity. But it's really not what the Bank to the Future secondary market is. The Bank to the Future secondary market is a place for those that don't have the patience, or for whatever reason, life circumstance means that they can't write out a long-term investment. And sometimes life just gets in the way and things change and you need liquidity for different reasons. Maybe your life circumstance has changed, or you want to invest into something else. And so therefore you can't stomach out the longer term time frame that private equity has. And so if you look at traditional venture capital investors, those are the professional venture capital investors in private equity, by purchasing shares in early stage companies and looking to ride them out for approximately 10-year period to see if they IPO or go public or have really, really large increases in valuations, like we've seen with many of our multi-billion-dollar unicorns that did earlier funding rounds through Bank to the Future and were pulled together with our investor community, as well as the Bank to the Future platform. And we're starting to see some of those come through now. And some people thought that this might be, a 6-month investment, 1-year investment, 2-year investment. But if you look at the investors that have been invested from the beginning and did diversification, and so when you sign up to Bank to the Future, we make you actually complete a quiz so that we can ensure that you understand how investing in private equity works, and how to do that through sound diversification and following the principles of professional venture capital investors, who are the ones that make all of the money at the expense of when they are pumping excessive valuations on public markets. And so that's really what the game that we tried to help people achieve here is, for disintermediation of the venture capital market, so that our investor community could build a portfolio, and as long as they're qualifying investors, can diversify into the companies that are building our industry. And so we have two types of markets. We have a primary market, which is where we have new deals that are where the company is looking to raise finance so they can invest in their growth. Now, most companies fail. That is just a reality of private equity. In fact, 9 out of 10 companies tend to fail. And you have a few in the middle that never get to the exit opportunity, and 1 in 10 of them might get to the point where they turn into a multi-billion-dollar unicorn and go public, like we're seeing now with some of our companies like Coinbase, Robinhood, and various other ones that are announcing that they're going to be publicly tradable. Congratulations to all of our investors that have a part of those and have those in their portfolio. As a result of building a portfolio on Bank to the Future, we really look forward to seeing where they go next. But the secondary market is where investors that have already purchased in the primary market are able to advertise that they're looking to sell or they're looking to buy, and other qualifying investors can either take those orders or place those orders, and they can be matched up. It's kind of like a bulletin board. It's not a fully traded market where you have, in order to do that, the reason for that is you have to be a national stock exchange in order to implement some of the features that you might be used to on a normal market. But what it is it's a bulletin board where those that could not stomach the long-term time frame or life circumstance changes are able to advertise and see if anyone else wants to accumulate those shares. And we have to have a price floor, because it can't just be a fully tradable price discovery market, because then those companies would have to be public companies. And that means that you won't be able to invest in private equity, because once they reach public stage, like Coinbase is heading to now, if they go public, or Robinhood, is they have to invest significant resources in meeting all these disclosure requirements, having publicly available audits, transparency requirements, market requirements, all this types of stuff. And the overhead of a company doing that is not something that an early stage company can do. So you have a bit of a trade-off when you're investing in private equity versus public equity. With public equity, you pay the really high valuations because it's later stage, and therefore the returns are often lower because you are reaching the stage where they can afford to do all the public disclosures, information rights, and everything that happens when you become a public company. There's a trade-off with when you're investing in private equity is you don't get all of these public disclosure requirements and everything that you need. You do get private disclosure requirements, which is a lot lower bar, so that private companies can raise finance without all these ginormous operational overheads of public audits and all the sorts of things that you have to do when you're a public company. The downside of that is you just don't get access to the same level of information that you would if a company was already public. But the upside is that if those companies succeed, then you get access to the very, very high return, high risk opportunities. But you've got to be able to live through the long-term time frame that it takes for a company like Coinbase to go public. So Coinbase started around 2011, and they're looking to file their public offering 2021. So that's a decade to build enough value. And they had various private funding rounds along the way. Seed round, Series A, Series B, Series C, Series D, Series E. And the goal is to get to a higher valuation each time you raise additional funding because your company is becoming more valuable. This creates a bit of a problem for investors. They would, when investors are building a portfolio in private equity, they would love to know, what is the real price of my assets? Well, the real price of your assets is what somebody else is willing to pay for them. And so people make the mistake of thinking, because the price hasn't changed for like 3 years. So in the example of Kraken, the first funding round was done at about a $20 million valuation on BnkToTheFuture. And the second funding round, from the seed round to the Series A to the Series B, was done at a $4 billion valuation. Now, in that 3-year time frame between 20 million and 4 billion, many people were like, why is the price of my shares still a $20 million valuation? Is nothing happening here? Well, the reality is that Kraken was growing so fast that it didn't need any funding because it was making so much returns through, making so much money through revenue and through growth and reinvesting and acquisitions and mergers and trying to build the biggest company it could build, so that when it does its next pricing event, you get suddenly from, one share price, boom, to a very high share price in one go. And so the way that our secondary market works is we try to capture that into the secondary market, which is, we have a price floor, which is the price of the last funding round. Now, if we let it go below that price, then you need to be a publicly tradable company. And I know many people, they've entered the crypto markets and they're used to very fast trading, high liquidity, pumps, dumps, all sorts of stuff. And so they expect that to be the same in equity. Well, the people that made, vast wealth in Bitcoin and Ethereum, if they were not allowed to sell, and they had a longer term time frame, those were the ones that got really, really wealthy. It's not that they weren't allowed, but in private equity, it kind of forces you to be long term because there's no liquid market until they go public, until the company gets acquired. Like Bitstamp, for example, they did their funding round and then later it was acquired through a forced acquisition, and investors get the return because through the acquisition. So there's these different ways. But if you, in that time period, and you can't wait for Kraken to go from 20 million to 4 billion, for example, because life circumstance changed, then the secondary market is a place where those that do have the longer term time frame can snap up some of those shares fixed at the price of the last funding round. And those that don't have the longer term time frame can have a way of exiting. Now, they may be trading at a premium to the last funding round, or they may be trading exactly at the last funding round. And that's the way to think about it. This is long-term share accumulation in a high-risk, high-return environment, which gives you the ability to diversify into the growth of an industry. And so the secondary market, we don't allow it to trade below the price floor, because that creates lots of problems for both investors and the company. Because it's not a very frequently trading market, because it's not a public company yet, you can't have, if the price is allowed to go below, you may get people just racing the price down to nothing just simply because they needed liquidity in that situation. Nothing to do with the valuation of the company or the fundamental proposition of the company. Secondly, it could screw up the chances of the companies getting the next stage of valuation. So all of the investors that are long-term could end up being really, really shafted by the ones that just needed liquidity for no reason to do with the company, but just because life circumstance changed or they needed those funds. So that is why we have that price floor. And if the company is that they're allowed to trade below the last funding round, or the people can place orders there, then they would not be able to secure the professional venture capital investors, because people would be like, well, it's valued at this on the market, and we want to pay this, which is the market valuation that a professional investor attaches to it, that does it full time as a venture capital investor, or an IPO as an investment bank, whatever it might be. And so that's why you have these gaps there. And it's really important for the growth of the company that they can, as they grow, have these pricing events, do bigger funding rounds, so that they can get and drive returns for the earlier investors, as well as get to the growth based upon this model that exists in private equity. Many people want to have a great model for value in these companies like you do in the public markets, but unfortunately, because the information is not publicly audited, these are tend to be founded by entrepreneurs early stage, which are trying to do so many different things at once. We often find that they fail at their investor relations. So we're trying to make it easier for investors to communicate, for the companies to communicate with their investors. But often it's a challenging thing to do. So we're working on initiatives that we can do to try and provide that. But you have to remember, in private equity, these are often under-resourced companies trying to grow, and they're just working on so many different things that it becomes very challenging. Some companies are really good at providing those investor updates, others are bad. Now, when you buy on the secondary market, you don't have information rights. So it's one of the downsides, that you may not necessarily have all that information, because this is the only way that we can actually provide this service. So the reason for we don't have every company on our secondary market is because we provide some kind of criteria that we're looking for the company to have reached a later stage of growth. This is not a place for you to sell failing companies. If you invested in a company and one of those companies is failing, then we hope they wouldn't be meeting the growth criteria to make it onto our secondary market. And the secondary market is not a place to dump failing companies, because it's the nature. When you invest in private equity, if the company doesn't succeed, you go through liquidation proceeds. And we've had companies that have failed, and they tend to pull together the assets that are left over. A couple of them are paying out a final dividend before they close the company. Or they might engage in some kind of share buyback, or they might just close altogether. But that's how the product works. So there is a criteria to qualify for the secondary market, because in the future iterations of our platform, as more and more investors are joining our investor community, we're trying to make it as easy as possible for people to build a well-diversified portfolio, and the secondary market is a great way of doing that. And as we launch future products throughout 2021, we want to make it easier for people to deposit some funds and just have a diversified portfolio in a very simple and easy way. And our secondary market is a great way of doing that. So that's where we are right now. Now, what I think investors started to notice over the Christmas period is that the exchanges, have always been the ones that benefit from all the excessive trading that happens in our market. And rather than actually, having to trade all these different things that create taxable events and 90% lose money at the 10% of insiders, the exchanges tend to be the ones that profit from all that. We've also got some other trends. Companies like security tokens, new emerging trends, and the growth of stable coins. And some of our companies like Circle is the issuer of the USDC stable coin. So we started to see that people were trying to buy this long-term value from those that couldn't stomach or their life circumstance changed and therefore needed to sell because they couldn't hold for the long term. And they started to snap up some of these undervalued assets relative to the prices that they're actually negotiating. And then when Coinbase and some of our other portfolio companies and Robinhood started to announce that they're going to be going public, or that they're applying to go public, these things have not been confirmed by the regulators yet, then people started to realize that there is ginormous growth happening in our industry. More and more institutional investors are coming along, and Bank to the Future is a way that they can accumulate assets in these exchanges. And so we're seeing that there was a redistribution from short-term holders to more longer-term holders. And this is a really interesting trend that we're seeing, and looking forward to providing better ways for people of understanding, firstly, these products. It's why we created the Retirement Plan B program. One of the reasons was to have a much better educated investor that knows how to build and protect their wealth as this industry grows, because this was founded upon a fundamental principle of Bank to the Future was funded that we believe that this was the disruption of a multi-trillion-dollar industry. Financial technology companies were going to be doing innovation within the traditional financial sector, and Bitcoin companies were going to be doing innovation outside of the traditional financial sector. We wanted to invest in the industry and diversify wide, so we built the platform so that other of our qualifying investors could co-invest alongside us without necessarily just doing the traditional routes of investing in a venture capital fund or whatever that may be. So we wanted to give that understanding, and what I'm going to do just before, let me just check everything's working here, and hopefully I haven't been logged out. I'm just going to do, before we pick up the questions that you might have on the secondary market, I'm just going to do a quick screen share so that you can see exactly how this operates. And so here is at Bank to the Future, we're going to be working on changing the user experience, because many people didn't know that the secondary market existed, because they go here and they go to start investing. And this is where all the primary market deals are. We're going to be taking a bit of a pitch break. We've got deals lined up. We're going to be focusing on the secondary market for a little bit. And also the educational products that we've been launching throughout 2021. But here is where you can go, and you can see that we got various deals listed on the secondary market. You can see that Bitfinex had a bit of a price increase, and Kraken were the two most popular. And obviously Ripple Labs, because it's going through the SEC dispute at the moment with the XRP, but this is the company. And Circle is ordered in terms of liquidity and volume. And while volume is still low, you can start to see that those trades are starting to go up, and people are starting to realize the value there. So what you tend to do is you go to something like Kraken, and you can see here the bulletin board where people are placing their orders because they don't want to hold it any longer. And these people want to purchase above the price floor. And you can see different information here. You can see, if you go to the company page, you can see the history of pitches that happened on Bank to the Future, a bit more details about the company, but by no means full information. And that is one of the things that we talked about, the risks of that. You've got a public discussion forum where people can ask questions. And then if you're actually a shareholder, you have a private investor zone here. And you can go to the market, you can see different information. You can see a bit of a description where it would disclose what we know about the number of shares and estimated valuations. But as I said, we can't fully know these things because we've just got the information that we had from the last funding round and any additional information that they're willing to disclose. So this is a risk that you have to take. We list some of that. You can see the price floor. You can see the history here. So when we first launched the market into beta, we didn't have a price floor. So you can see that it went below the price floor when we didn't have that. But once we introduced the price floor, people snapped up those undervalued shares relative to the current valuation and the growth of the company. And you can see the trade history. So you can see, only a few trades happen each day because it's not a high frequency trading market. We're not engaging in any market making or anything like that. This is simply a bulletin board for you to be able to invest in companies that you might have missed from the primary markets, from other investors. And we have an automated process for you. So you can just simply say that whether you'd like to buy or sell some shares. And we've got a very simple user experience. It generates the share certificate. It generates the transfer agreement between the two parties. And then you can log in and you can see your transfer agreement. You can deposit funds in order to do that. Everything's priced in USD star. You can deposit Tether stable coins or TUSD or even any fiat currency. When you deposit them to Bank to the Future, we convert it into USD star, which is backed by dollars and stable coins. And so you can onboard into the crypto market. You can say how many shares you want to go. It confirms the order there. And don't forget, if you own Bank to the Future tokens, deposit them to your Bank to the Future account. Click this on and you can get a 50% discount on the trading fees on the secondary market by paying with your Bank to the Future tokens. And so that's not compulsory. You can pay the higher fee if you choose. But that's exactly how it works. And we automate the peer-to-peer share transfer between the buyer and the seller and the transfer agreement and make everything really simple and easy so that you can accumulate those long-term positions. So I'm going to open it up to questions now and come back on camera. And hopefully, Famida, you got some questions and we can go on for another up to 30 minutes. But if there's not too many questions, we'll end it there early.
Oops, I was on mute. Okay, cool. So quite a few people have joined. Not too many questions, but somebody has raised quite a few concerns about the secondary market and BFT. But I'll go with the first question from the live chat from Mauricio. Are there any market makers in secondary market?
No, we don't do market making. It's purely a peer-to-peer market between those that want to sell because they don't have the longer term time frame, and those that want to accumulate because they do have a longer term time frame. It's not a trading market. It's not market making. It's purely a bulletin board for those that want to buy and sell.
Okay. So the person that's raised quite a few concerns, which I think are really good questions. Generally, we do actually get these questions in our support. So Too Good has asked, commented, there's a few failures. Can somebody check into the Telegram community group that we have? Please hire new people. Please take some action. 2 years, nothing has been done regarding the token. So there's quite a few things there, but yeah, I think, do you get that, or should I break it down a bit more?
Yeah, I mean, we can take, so this is more about the secondary market. If people want to take questions about the Bank to the Future token, then we can take those one at a time as well. Sure. So
they did actually ask. Sorry, I just wanted to say that they have specifically also said that they feel like the secondary market is not user friendly.
Okay, great. So if you've got suggestions that you'd like to see on the secondary market, then we can go through that. As I said, in terms of user friendliness, we think it's as simple as we can get it at the moment. We haven't had, but if you've got suggestions of exactly what you can do. So in terms of how it works, you go over, we list all of the deals that are on the market. If you want to go over to one of those markets, then we give an overview of the market. We have the different prices here. If you want to place a buy order, then you simply go over here you would have to have some funds on your account. You can state the number of shares that you would like to purchase. You can state the price, and it will give you different things. Let me switch off my camera so I can pull the screen over a bit more. So you could say that you wanted to purchase 200 shares. Sorry, I've got the price wrong. So the number of shares that you want to sell, and you could state the price that you want to buy at. So it could be 20 here, and it will tell you whether it's below the price floor or not. And if it is below the price floor, it will tell you to put a higher price in, like 21. You enter the number of shares. It will tell you the value of those shares. So this is a $4,200 order. You press next. It gives you some of the warnings to make sure that you understand how it actually works, and some of the things you need to be aware of. So you click those so that you can understand that. Click next. Then it confirms the order for you, and it will place the order on the market. Any improvements that you'd like to see on that user experience, then we're more than happy to actually look at all those suggestions. But I think it's a fairly easy, and then that places the order on the market. I don't want to place this actual order. You can go back to the market, and then you can see those orders. Now, maybe somebody's selling and you'd like to buy, so you can see the price that they're looking to sell at, the number of shares, the value of that. So let's say you click and you want to buy. You can say how many shares you'd like to buy from that user. It will tell you whether the price is wrong or the round is wrong, and then you just go through the same process. So yeah, any suggestions and what you'd like to see improve on that user experience, then we're completely open to that as well.
So the discussion forum part, when you enter whichever company that you want to invest shares in on the secondary market, like what about the company documents? How do investors see this? Because there are quite a few people that have come through to support, and they're not direct first-time investors on the BF platform from the primary market. So they're actually just coming and seeing companies that they've previously been interested in, and Kraken is one of them. A lot of people that have no investing experience but know about Kraken, want to invest in Kraken, come here and see all these different pricings here. Some of them are ridiculously high. So for somebody who's new and coming onto the secondary market and wanting to invest, have verified and certified, how are they seeing the company documents? How are they seeing the company information, what their returns are going to be?
Yeah, so this is an important distinction. You're not actually buying shares in Kraken, so you don't have access to Kraken's documents. You're buying shares in a special company that we set up that owns shares in Kraken. So the investment documents are displayed when you place the order, so that you can see the name of the company, which is BnkToTheFuture Kraken SP, and you can see the terms and investment agreements, which are all displayed when you actually go through the order. And so when I went through that placing the order, you enter the number of shares that you want to buy. So let's say I want to buy 10 shares. Where are we? So at 90. So this is a $25 order. So we'd have to place a higher number of shares. And then it will tell you here, you requested an amount below the minimum threshold. I think it's because I don't have the available funds on this demo account, maybe. In the next step, it would actually give you all your investment agreements so you can see the terms around BnkToTheFuture Kraken SP. But this is one of the downsides of not investing in the primary market, because the company in the primary market, the company is selling the shares, the underlying company, and we put together a special structure. So if you invested in Celsius, then the founder of Celsius is here, and he's doing a funding round, and we've entered into an agreement with the founder of Celsius and the company. And therefore because this round is closed, on the investor page, you can see all of the underlying company documents. And we have, because the company is selling those shares, they have to meet all these disclosure requirements. But on the secondary market, you're buying shares in the structure that we put together that's backed by the shares, if that makes sense. So the disclosure documents are the ones of Bank to the Future and the SPV, which are all standardized documents. And so in terms of the information that we provide is, if you go to the secondary market, so you go to a company like Kraken, we provide you details on the valuations of the last funding rounds by going to the company info. And you can see the previous pitches here. And we give you an overview here of what the valuation was at the last funding round. But we can't give you real-time valuations because we don't have that information, and there is no real-time valuation. And so therefore, we can see that the price floor is the price of the last funding round, which was $20.83. And the last funding round with Kraken was done at a $4 billion valuation. And therefore, they may have issued more shares in the future, but we won't, you can't fully know that. And that's one of the downsides of investing on the secondary market, because the company is not actually involved in this transaction. And so we can either just make it completely no way of selling, which is how traditional private equity works, or we can provide a way of giving people additional resources like this and having the bulletin board for that. And so if you pay anything above $20.83, so if you divided, say, a $4 billion valuation by $20.83, you could make an estimate of how many shares there were in the last funding round. And if you pay anything above $20.83, then you can come up with a calculation of what the estimated valuation is based upon that there. But remember, you're buying shares in a company that owns shares in Kraken. If Kraken was publicly tradable, then you'd have to wait till the IPO stage, and therefore you'd only be able to get in at a much, much later stage than if it ever does go public, that is.
All right. I have a follow-up question from that one then, Simon. So say you bought some shares on the secondary market and you want to trade again. So you want to buy and then sell. How soon can you do that?
So I'd need to remember the exact rule, but I think there's no lock-in period for buying and selling on the secondary market. So if you want to place an instant sell order afterwards at a higher price, then you can just leave them there in case it sells at that price in the future.
Cool. Next question I have here from Gustavo. Will there be a portfolio facility on Bank to the Future secondary market platform to record transactions?
Yeah, we have one now, but a pretty bad one. So if you go to the portfolio section of your account, then this will take a little bit of time to load up because there's we're screen sharing and there's a lot of trades on this account. But you go to the portfolio section and you get an overview and a trade history of every single trade that you've made in that company. So you can see all of your transactions. You can see all of the direct investments that you made on the primary market. And here you have the SPV section. SPV, I know this is, we need to come up with a better name, and we've got a complete redesign of the portfolio section that we'll be releasing later this year after we've done all of the compliance updates that we need to do at the first half of this year. Then the SPVs is where you can see the companies that are held within SPVs. So here you've got Kraken, and an SPV means that it's in this. An SPV stands for a special purpose vehicle, which is a special company that we set up that owns and is backed by the shares in these underlying companies. So if you go to Kraken, then you can see here some information around that, and you can see all the history of your trades as well, the share certificates, If you sold some, these share certificates here, it updates the share certificate each time you place a trade, and you can download your investor agreements and various other share transfers that you've done. And that is, at the moment, the portfolio. On the blog and the announcements channel, let's see if I can find it under pressure. I know we released it a while back, but some designs that we've been working on that we were looking for feedback on, and we're going to be implementing for the redesigned version of the portfolio. Let me do a quick search. No, that was a different one. Sorry, trying to do this on live. Maybe if there's another question while I'm looking for this, but you can see I can find an old blog post under the announcements. Every time we go live with anything more, we post it on the announcements here. Any updates, any upgrades, so you can follow that along.
Question then, Simon.
Sure.
What currencies can you use? This is a question from Michael A. Michael A. Sorry.
Yeah, I found it now, so I will take that question.
Okay, cool.
But here was an announcement where we show you what the portfolio when it goes through our redesign. We're currently, if you're a developer and you're looking for roles, please do. We're currently hiring at the moment. So under the About Us page, you can go to the careers page, and we're currently interviewing at the moment. We're hiring for a number of different roles in investor relations, customer support, and development and project management roles. Yeah, you can. This is what we're aiming for everything to look like. So you can see all these different things, these different types of SPVs that you have, any convertible notes, different investment products, and you can also get your transaction history and all the documentation in one easy place on the portfolio. We did actually have something that was really nice and very effective in the past. But when we launched the secondary market, we had to restructure the entire platform. And then as the industry grew, we had to refocus on new compliance changes. And so this got put off and put to the back burner that we needed to implement, and then new payment channels that had to come through as the industry started to become more and more aggressive with different regulations. So unfortunately, that didn't meet the product development. So we're now hiring in order to increase the size of the development team so that we can get some of these features out faster for you. Okay, question you had for Mina?
Yeah, yeah, that portfolio looks incredible.
Yeah, we know what we need to do. It's just we keep getting distracted with it's not like these suggestions, they're all in the queue. Yeah. But it's a question of resources and allocation of resources to get them in. And you know, even once you hire developers, it still takes an average of 3 to 6 months to get them onboarded and coding to a high standard. So it's not quite as simple as but we know that our investors don't really care about those things. They just want to get the results. So it's our job to try and get those results.
Yeah. Okay. So question about currency. What currency can you use on secondary market to buy and sell?
So what you would do is if you want to place a trade on the secondary market, then you will need funds on your account already. So if you head over to the fund section, everything is priced in US dollars because we don't want multiple markets. We don't want Bitcoin to, you know, we don't have too much liquidity for one market, let alone if you started having a Bitcoin to the SPV market or ETH to the SPV market. We want everything condensed in one place. But you can deposit here. We have this thing called USD Star. Now, USD Star means that you can send in any SWIFT supported traditional currency. So you could send in your GBP, your Great British Pounds, your Euros, your Chinese Yuan, your Japanese Yen, whatever you got, and any currency that's supported by SWIFT. And what happens, it will come in and it will automatically be converted into USD Star. And USD Star is backed by a bunch of stable coins and US dollars. And USD Star is what we use for the trading market. So everything's priced in USD Star. and it's backed by a good variety of stable coins and dollars. The reason we do that is because everyone wants their money slightly differently. And so if someone wants to withdraw some of their funds, they can go over here and they can select that I'd like to receive it as a bank wire to in US dollars. Or I'd like to stay in crypto and I'd like to receive it in Tether, or I'd like to receive it in TUSD. And throughout the year, we'll look to support more and more options. But we onboard you into USD Star. You can send any, you can make a bank transfer, bank wire, and then it will stay in the USD Star wallet, and you can withdraw it as either dollars or in a stable coin. The other type, but yeah, at the moment we are working on applying for an additional license that will allow us to do crypto to fiat exchanges. We haven't secured that license yet. It's currently in motion. But once we've secured that license, it means that we can then automatically convert between fiat and cryptocurrencies, and we can offer more options for getting into USD Star and building your portfolio as well, using different options. So that's a work in motion at the moment. And we're also applying for additional licenses at the moment to open up who can actually invest as well, beyond just the qualification criteria that we set at the moment based upon our current licenses and regulations.
Yes, that actually leads me to my next question, which would be the jurisdiction restrictions. So right now, we have quite a few US investors that want to use the secondary market, but can sell. But what does that even require for a US investor who wants to use the secondary market?
So US investors can't currently buy from our secondary market, but if they hold their shares that they bought on the primary market for a minimum of 1 year, they're able to place a sell order. And that is because there is regulatory restrictions on purchasing. The US requires you to be a national stock exchange in order to offer such a service, or you need to have a different license and be a US company. Now, we don't want to put the whole company under the jurisdiction of the US. What we've always done is we partner within our group is a regulated SEC regulated broker dealer, and they are only authorized to do primary market transactions. So this allows us to onboard US investors into the primary market. It also allows those investors after the lock-in period to place a sell order on the secondary market. But right now you can't buy from the secondary market with our existing structure. So this is a non-US market for purchases, but they can sell after the 1 year lock-in periods that the SEC requires in order to sell private equity should you be a qualifying investor.
Also to note, you can pay the fees on the secondary market with BFT, right?
Yeah, so the fees on the Bank to the Future Secondary, so you can go here if you want a full fee schedule, then go to the bottom of the website. You can see the fees, and then the secondary market is 2.5% to the buyer, 2.5% to the seller. But if you deposit Bank to the Future tokens and click the toggle to pay with your Bank to the Future tokens, then you get 50% discounted trading fee. But then you're subject to the price fluctuations as well. But yeah, you can deposit those and pay for your secondary market trading fees using Bank to the Future tokens or your US balance.
Cool. Just talking about jurisdictions, Randy has asked, what's the jurisdiction for BFT? What's it been registered under?
What's the jurisdiction for BF? What I assume they're asking, and I may be wrong, is what the Bank to the Future token is an open source token. It exists on top of Ethereum. So Ethereum is the layer for it. When you issue a token, then you have to do a model for selling that. And what we did is we sold it in compliance with securities laws just to our Bank to the Future investors. And so originally when we sold the token, it was just to those that wanted to use it on the platform. And so we restricted it, the number of tokens that they could purchase, just to the membership levels. So people purchase those tokens, and we did that in an offering, a non-US offering and a US offering. And we filed with the SEC in order to be able to sell those tokens. And it's what's known as a Reg D offering, and filed that. The actual tokens were issued from an entity within Cayman Islands, and that one-time distribution event has now occurred. And you can return back to the original token sale where you can see details on that. Once they're out in the sphere, they're an Ethereum ERC20 token, which means that any cryptocurrency exchange that wants to make a market in those can put together buyers and sellers through a cryptocurrency exchange. And at that point, they're no longer sold by us or within our control at that stage. So that's up to different exchanges that want to do that.
Okay, we have 10 minutes left on the clock. Randy has asked another good, am I wrong to understand trades are considered a taxable event while exchanges of token are non-taxable events?
So I can't give you tax advice, but I have got a lot of experience in doing my own tax situation. And so I can share my experience, but you would need to consult your own tax advisor to confirm this. But every time you exchange a cryptocurrency, you create a taxable event. And so most people treat cryptocurrencies as property. Different jurisdictions treat them in different ways. But the consensus is that every time you exchange a cryptocurrency for either equity or another cryptocurrency, then you create a taxable event. And so you need to actually consult your tax advisor to figure out what the tax treatment is in your jurisdiction. But when you hold them, what we're working with in our retirement plan B customers is structures that take out all of the pains and frustrations from that process. And doing those in very efficient ways. But yeah, every time if you go crypto to crypto, most jurisdictions would consider that a taxable event because you're exchanging one asset for another asset, that's the definition of a capital gain or capital write-off. So you can either write those off if it's at a loss, or you'd have to pay capital gains tax likely if you speak to your tax advisor in your jurisdiction.
Cool. Next question, I guess for everyone to know would be good, about how does a pitch go on? How do shares get to the secondary market, and how can people be notified?
So if you're on our newsletter, then we'll notify you when a new deal goes live on the secondary market. What we tend to do is those that invested in the primary market will be notified first. So if any of those want to place a sell order, then we would put that in the investor zone, which is the private investor community for those that invested in the primary market. And then they can place some of their sell orders, and then we would notify our investors that they're available to purchase. And then you can jump into the market. So make sure you're subscribed to our newsletter, and we'll let you know about new deals that go live on the secondary market.
And how does that work for US investors for the primary market? Sorry, I know we're talking about the secondary market, but we do have some people that are interested in both markets that are from the US.
Sure, yeah. So the way it works in the primary market is it's on a per pitch basis. So each pitch, we try and encourage them to be as open as possible, but some pitches just simply aren't willing to take on US investors because it comes with additional requirements. We take out as much of that pain as possible and do some of the filings that need to be done in order to offer these private equity and securities to private investors. But some people are just not at a stage where they think it's worth it because it may be a small amount of money and a lot of extra work and a lot of cost and overhead. So we try and make that as painless as possible, but on a per pitch basis, the pitch will let us know whether they want to take on US investors. And if they are, then we will go through a process where the due diligence gets signed off by a US registered broker. And then if that pitch is available, then they can invest. Now there's different types of pitches. And again, you don't want to know the complications, but just letting you know so you can understand it. is that there are pitches that are able to be marketed widely, and those require every single investor to provide proof of assets and proof of income based upon the SEC's requirements of who can invest in these things. And so you'd have to upload documents to prove it, and the broker is legally required to get those documents as part of their regulatory obligations. Then the other type of pitch is one that's not going to be marketed outside Bank to the Future, and is just to investors that we already have an existing relationship to. Those investors, because we're not soliciting, it's called, and promoting it on BF Live or promoting it on YouTube or promoting it in any other way, then they have there's less of a pain point for investors, because they can simply self-certify to state that they do meet those requirements, and they're not required to produce the additional paperwork that is required when you actually go out and market and promote something. So those are the two different types of offerings that are available. And in some pitches, for example, the SEC is kind of going through a bit of a transition period right now, but there are some when they're involved in, they might be issuing a token bonus or doing a security token. And that means that they'd actually have to, the broker would actually have to go to the regulator and get permission from the regulator to look at that. And sometimes the company doesn't want to do that because it would just take too long, or the process will be held back. And so therefore, when there is a token involved, they tend to not want to involve US investors, because the US has taken a stance which is slightly different to the rest of the world in terms of whether tokens are securities or not as well. And if they are securities, then it has to be treated in a different way. It can't trade on a cryptocurrency exchange, and it can only be traded on a securities exchange. So that's why you tend to get this friction between US and non-US offerings. And it's all around your regulator's opinion about what investor protections are and what needs to be in place.
Phew, that is a lot of information.
In a nutshell, if the pitch isn't open to you, then you won't see it. It would just say
right.
Not open to US investors. If the pitch is open to you and you need to provide additional documents, it will ask for those documents before you invest. And if the pitch is open to you and it doesn't need any additional documents, then it would just let you invest.
Right. But for people that are holding BFT with the membership, who are part of the membership program that we have, there are various tiers, right? But for US investors, particularly, obviously they can't at the moment deposit all types of currencies. However, they can deposit BFT. So where would you advise them to purchase BFT so that they can get on the membership program that we have?
Yeah, unfortunately, so we are not able or authorized to sell tokens to US investors unless we file a registration for every sale, which we did in the initial phase. But we can't, it's just not feasible to do that for every time a US investor wants to purchase some Bank to the Future tokens. So the only way to purchase those Bank to the Future tokens is from somebody else that's willing to sell them. And many exchanges restrict US investors from purchasing simply because the US may define it as a security, and therefore it can't be purchased from a cryptocurrency exchange. And so you have to wait for the US to figure out what they're going to do with that. There are options to purchase maybe from a decentralized exchange as well, but we are not in charge of those processes. You'd have to register with something like Uniswap and be, in the decentralized exchange community, have some Ethereum. It's a bit of a learning curve. It's a bit geeky, but that is one possibility through decentralized exchanges. But yeah, if you have Bank to the Future tokens, while we're not allowed to sell them to US people, you can deposit them if you have them already. And maybe you got some through the initial, when we actually filed with the regulators to be able to sell them. And so those are the options. Unfortunately, it's a very disjointed, we're in a global world. And, this is why so much innovation is happening within Bitcoin and decentralization, because most people just come along thinking as global citizens. They don't consider themselves when they're transacting online as something that's happening on a desk over a piece of paper.
I have one more question before we have to go. I know we have actually hit the 1 hour mark. About the exchange rate. So how are we doing the exchange rate on the secondary market? What are we using?
We're using the CoinMarketCap API. So CoinMarketCap is an aggregator. So it takes all of the exchanges that make markets in BnkToTheFuture tokens, and it gives a aggregated value. And then we take that value. And because we prefer people to purchase them from exchanges, it's a very expensive way to purchase them on our platform. The reason we do that is because we charge a 10% premium, because in the time that it takes to get them from the exchanges, the price can move and it's risky business. So if you want to get the best price, then go and purchase it on an external exchange. And if you want to know which exchanges offer it, go to coinmarketcap.com, type in BFT, look up the BnkToTheFuture token, and it will show you a list of markets, and you can see all the exchanges that make a market. You'll get a much, much better price purchasing on an exchange through us. We just provide that service to try and offer some convenience to our users, but you're paying a 10% premium. So I encourage people to go to exchanges to purchase those. But obviously, we can't recommend individual exchanges. They all have their own policies and which customers they accept. And it's a token that trades out there, and we don't have control over those processes or what happens on those exchanges.
Oh, that's it. That's it for the questions. They came flying.
Okay, awesome. I think in the previous question there was saying you need more support people, I think, and we totally agree. We are hiring right now, and we are looking for people. But I do want to help you understand it's a challenging industry to onboard people to. The educational curve is very, very steep. And so when we bring in new people, it still takes a long time for them to get their head around a lot of these concepts. So we do need to do better. We are hiring. We will do better. But bear with us while we make sure that we get more and more team members as the industry is growing and things are growing on our side. So thank you very much for your patience. I hope that was useful. I hope that gave you an insight into some of the challenges in bringing a market. There's a reason why markets for private equity don't exist, because the challenges are so immense. And I also understand that people come along and they're used to just Bitcoin. Money flies around very freely. You can go onto exchanges, you can trade up and down. There's lots of liquidity, but it doesn't quite translate into the securities market when you have to deal with global regulations. But the choices are no liquidity or restricted liquidity, where we try and meet all of these challenges and make more options available for you. And if you don't want to use it, you can always be a long-term investor. And that's how most of the returns have been made, through BnkToTheFuture, through long-term investing rather than trading. So for me to thank you for picking up all those questions. I hope you enjoyed episode 81 of BnkToTheFuture Live, and hope that 2021 is a great year for you. I know that there's lots of challenges, but at least in our little bubble of the crypto market, really interesting things are happening. That's becoming a bit of an escape for lots of bad things that are happening outside of the crypto market. So we'll continue to give you content. We'll continue to do this. And if you've got more questions, we'll pick them up next week in episode 82 of BnkToTheFuture Live. Thanks, everybody.